And all week long, we're looking at the best that Boston's burgeoning tech hub has to offer. Our next guest, well, is helping to get the tech startups here off the ground. Auerbach is the partner at CRV, a firm that has been providing capital to early-stage companies for nearly half a century now. Among those investments, Twitter, the Flatiron School, Patreon, Udacity, and many more. And they've just closed their 17th fund to the tune of $600 million. John, welcome to Bloomberg Technology.
Thanks for having me, Caroline.
What are you spending $600 million on?
We just closed a new fund. It's as you mentioned, our 17th, and we might be the first firm in the country to raise a 17th fund. And what that means is there's a lot of history there.
Yeah.
We've always been early stage technology investors. That's always been our sweet spot. And we've been lucky enough, and I do mean lucky, in order to be involved with some of the companies you mentioned. Also, we're expanding our mandate slightly this time, and we will pursue some selective growth investing as the companies get a little bit more mature.
Why do you say lucky? Don't you make your own luck?
Most venture capitalists believe that they're differentiated in 14 different ways: smarter, faster, better. And we have 48 years of data, and that data shows us that we're actually not very differentiated. That at the end of the day, a lot of what we do is luck. Now, you create your own luck. It has to be through hard work and networks, and most importantly, having the credibility among the tech entrepreneurs. We're the ones who are really doing the hard work.
How much of those entrepreneurs are based right here in Boston? I mean, you split your time between here and Silicon Valley. What are you seeing in terms of breakup between the tech talents?
They're very different markets. I think a fair way of looking at it was that in the 1990s, Boston was having its technology heyday. And that's because Boston understood how to tie computers together. And in the 1990s, we were plumbing out the internet. Then the internet got built out, the bubble burst, and Silicon Valley and San Francisco really stepped in as the people who knew what to build on top of that internet. So Boston is a very different market. It's a much lower volume market. However, because of all that history, there is a very small group of incredibly talented entrepreneurs. We've got a company here called Drift, which is in the software as a service space, that is one of the fastest growing SaaS companies we've ever seen. And it's from a 5-time entrepreneur who grew up in the 1990s during the Boston heyday.
5-time entrepreneur. What have his exits been like? Do you see these entrepreneurs wanting to go for IPOs? Are they selling out? Are they? What do you tend to see as the strategy at the moment?
In some ways, entrepreneurship is an affliction. It's something that remains in your system for life, and it really doesn't matter the size of the exit for the type of person who just wants to create something that's going to change the world. In this case, the CEO is a gentleman called David Cancel, and he is an extremely talented entrepreneur who realized that there's a big market development that he can go exploit and build something. And Drift is fundamentally changing the way that customers can talk to the companies that sell them products. It's all about cutting out the middleman. Uber is about cutting out the middleman. Airbnb is about cutting out the middleman, and so is Drift.
Let's talk about Airbnb, because it was the purchaser of one of the companies that you helped back originally, Pencil Labs. They bought them a few years ago, the scheduling app that they were building. We're looking now at regulation that doesn't always help some of these companies cutting out the middlemen, because the middlemen get cross. And we're seeing here in Boston, Mayor Marty Walsh looking at perhaps making it slightly harder to be renting through Airbnb. Are they appropriate regulations that he's taking on board?
I think they're appropriate for a politician who needs to be elected. Okay. And at the end of the day, Marty Walsh, who's been a tremendous mayor for the city, is looking out for housing stock. So he specifically targeted investor-owned units. Now, I would point out that many of the other units outside of Airbnb are also investor-owned. And I think that this is part of an inexorable march towards technology, creating marketplaces where most of us would agree that our lives are better because of Airbnb, not worse.
Talk about that march in terms of the progression of companies such as Airbnb. There is an awful lot of private money, such as yours, that goes on to fund these companies to be phenomenally valuable, $30 billion. We know that the CFO has just exited from Airbnb, and they're not going to be IPOing anytime soon, or at least not this year. Are they waiting too long, or is it appropriate?
I think the Sarbanes-Oxley period had many CEOs very concerned about whether it made sense to go public, whether they wanted to be public company CEOs. And we sense that that's changing, that people are realizing that in order to be a successful leader of a company, they need to create shareholder value. They need to have liquidity for the employees, first and foremost. And that's why I think you're seeing more openness. I think most companies that can go public and feel as though they will trade well as public companies can and should.
Some of the vast amounts of cash coming into these sorts of companies are coming from enormous funds being raised. We look at, I brought it up earlier in the show, the Vision Fund, SoftBank's $100 billion fund. What does that do to your marketplace? Are they good because they're exits for you, or does it warp valuations?
To be determined. In our case, SoftBank has invested significant amounts of capital in several of our companies, and you could say that from a capital raising perspective, that's good. I think the whole world doesn't know whether they will be friend or foe in the long term, and whether they are aligned with the CEOs of the company in order to create that shareholder value in the best possible place for employees to work.
One of the companies you also helped fund and then sold off was Flatiron School, has been bought by WeWork, and WeWork is one of those companies that took a big chunk of change from SoftBank.
That they did.
What do you think of WeWork and the direction it's going? Because Flatiron School is called sort of about education, but WeWork seems to be getting into marketing services, into, well, accommodation rental as well. Is it trying to do too much for too many?
I think they've got a very bold and powerful management team that sees a world in a far different way, and that's what makes a great entrepreneur. Obviously, we don't know whether they will be successful in each of these areas, but I think it's very natural that they expand beyond their core office rental into core areas like learning, which is incredibly powerful.
What about learning in general? What about the industry you used to come from? You came from this industry. You were a media man. You're at the Boston Globe. You're a Wall Street Journal. What's the media missing right now when it comes to the tech scene, to developments?
A profitable business model, first and foremost, I think.
And how would you change that? What does the media industry need to do to change?
I think there are some bright hopes out there of getting rid of the printing presses, unfortunately, and right-sizing organizations, because there continue to be thousands and tens of thousands of talented journalism students who come out with a point of view, and they want to change the world, and they have the right values and the right backgrounds, and that there ought to be platforms across the world to accommodate those people. Unfortunately, that there's just an anchor around the neck of most media organizations, which is just a cost structure that's completely out of whack.
Who's doing it right?
I think if you look at Politico, they've right-sized an organization. You're also seeing some early signs of subscription commerce really starting to pick up. People, at the end of the day, people will be willing to pay for great content. Look at HBO. They're a creator of great content. People pay for it. And I think in the media world, long-form journalism has a place in this world, and people will pay for it.
What about data? Should companies be paying for data? Should we be being paid for our data?
We are definitely in the fourth industrial revolution, and that is a revolution all about data. If the third industrial revolution was the onset of the computers after World War II, right now everything is about data, and data is power. We've also seen how it can be a corrupting force. But at the end of the day, I think natural economics will take effect here, and that data will be good for all of us. We're all creating data. We're all measuring data. I measure it on both wrists, and it's powerful for all of us.
Give us some data to chew over now. Where should we be looking for? Where should we be excited about? Where's the next? Where are you getting into in terms of the fourth industrial revolution?
Sure. I think these last 10 years, the iPhone was released in July of 2007, and that began a 10-year push towards mobile. And a lot of that was about apps and UI and UX and design and swipe left and swipe right, which had a tremendous impact on the world. I think the story of hope is these next 10 years will be about very hard technologies. Artificial intelligence, NLP, NLU, all of these buzzwords that you hear. But at the end of the day, look at a place like healthcare, which is finally realizing that when you let computers enter the equation, not as a foe, but as a partner, you can more accurately diagnose dermatological conditions, breast cancers, cardiological conditions. So I think these next 10 years are going to be about partnering with computers as they learn and help, as opposed to just using the computer as something that helps us complete a task.